Good evening, everyone. This is Wayne, and this is the video version of the trade report for Thursday, April 19th, 2018. Well, the specter of rising interest rates found its way back into the news cycle today, sending bank stocks higher, but the averages fell, closing lower on the day. Will this be a one-day wonder, or will there be continuation into tomorrow? Stay tuned to find out more. Greetings, everyone, and thank you very much once again for spending a little bit of time in your day as we go over the events and price action that found its way into the financial markets today. Let's start off as we normally do with the S&P futures. You can see in the extended session from last night, we had some fairly decent sideways action that just began to kind of crumble as we made our way past midnight and toward the open of the regular session. You know, there was some downside action. It looked like it was starting to stabilize at this 2704.75 level that I have here, and I thought that would end up being support and we would probably go higher today, actually. But then the idea that we might get 4 interest rate hikes this year began to be floated in the news, and boy, the subject of interest rates is never a happy time for stocks, except for banks, which of course benefit from higher interest rates. So bank stocks went up nicely today. We had JP Morgan, Citigroup, Bank of America, Wells Fargo, Morgan Stanley, all of those, benefiting from the idea that we might get an additional interest rate hike this year. But the rest of the market never responds favorably to that information because higher interest rates basically eats into corporate profits, and corporate profits are what drive higher prices in the market. So the market fell today. So as the market began to fall and fall and fall, there just really wasn't an enormous amount of bearish energy associated with the market. There was almost an obligatory kind of feel to this. It was like, okay, we're talking about interest rates. That means we need to sell. And there really wasn't a lot of momentum or motivation, if you will, by the bears. It almost felt as if the bulls were part of the selling. And I don't mean they were selling to unload. They were almost engaging in a distribution cycle so that prices could be lower. So when all of this passes, there's a lot of good deals out there. Obviously, with Netflix going lower, Google going lower, Facebook going lower, a lot of different stocks going lower today, it presents a nice buying opportunity. Now, that may have backfired a little bit because Facebook and Google and Amazon did not go lower. In fact, the only FANG stock that went lower was Netflix, and it closed the day down only about $1.80. Google was up $14 today. Facebook was up $1.74. Amazon was up $29, and that was off its highs, and it's trading about $5 higher in the extended session now. JP Morgan was up $2.40. Morgan Stanley was up $1.44, and like I said, all the other banks were also in the green today as well. Citigroup traded up. Let's see where that ended the day. Bank of America was up 65 cents. Citigroup was up $1.30. And, you just have a bunch of stocks that in the financial sector that were benefiting from the idea that interest rates are going higher. So, and that's because the cost of borrowing money goes up. So banks loan money. And so if it costs more for people who are borrowing money or corporations that are borrowing money to borrow that money, then banks benefit. So it's kind of a double-edged sword. Banks benefit, other corporate entities, not so much. So there needs to be a fine balance here. But right now the Fed is trying to figure itself out. It knows it's going to raise interest rates 3 times this year, but it might raise it a 4th. And that's what got everything kind of struggling and moving to the downside. So I do want to take a look at a couple of a couple of stocks today. Amazon, as we noted last night when I was doing the trade report, Jeff Bezos came out and said that there's over 100 million Prime subscribers to Amazon's Prime membership, and that really got everybody all excited. And so Amazon was up, just huge today. And there will probably be some follow through, although with that kind of a move, it's part of my trading plan to simply exit a position that I've got a very nice profit in. And I did. Not to be greedy, it reached my profit target and more, and so I exited. It may still go higher. I don't know. But in keeping with my trade thesis and performing a reevaluation to see if it was something that I wanted to stay in, it just did not rise to the level where I felt as if I needed to be in it. And I think there were other things that I don't think that there were other issues that I was more interested in, believe it or not, than being in Amazon any longer. So that's, when a trade thesis is met, when your profit target is realized, yes, there is a case to be made for staying in a trade to really glean the additional profits that might be coming from it. But I didn't see a real case for Amazon to go all that much higher, except the fact that it may be in its earnings run. Every stock prior to reporting its earnings usually gets a little bit of a boost to the upside just by virtue of the excitement associated with the possibility that it may really beat its earnings and go much higher. So it's kind of a dynamic that plays out time and time again during earnings season. But again, Amazon met my profit target. I got out. I'm happy, and again, I'm looking to other issues now. So let's just take a look at Amazon here, and we'll take a look at a couple other stocks as well. Okay. So here's Amazon. You can see where yesterday I got that nice 1529.20 level met. And I was looking for 1576. I mentioned on Tuesday. I thought it could get there without a problem. And it tried, and it came down. It tried again and came down again and closed off its highs. Now, that's not bearish. That's not a problem. That's not the reason I got out. But it is looking as if it might be a little bit overextended. Maybe. I don't know. It very easily could go up to 1636. That's the 1272 first target. That would be more of a gamble than a trade thesis. That would be more of a, wow, I hope it does it. I really can't make a case for Amazon doing that. It is definitely the Apple of fund managers and institutional investors' eyes. It definitely is on the top of the list for most market participants. But with the kind of move it's had over the last few days and the fact that the market pulled back today, and we might even get a little bit more of a pullback tomorrow, I don't know. It was just prudent to exit. So Amazon's looking amazing. We'll take a look at Google. And Google is trying to go higher and doing a relatively decent job of it. I think it is overextended. Now, it did register a bullish engulfing candle today, which is a bullish candle configuration, but there has to be confirmation tomorrow. So we'll see what happens in Google. Right now, Google looks really good. It did hit the base of this cloud and then backed off. That also is it's a clue that there may be some downside tomorrow, or at the very least some consolidation. We'll see what happens. Netflix would be the next one, and I am in Netflix. Netflix actually found the green today, but then came back down. Now it's traded with a couple of dojis, which for all intents and purposes means indecision over the last couple of trading sessions. We still have a gap here that may or may not get filled, and that level comes in at that let's see, the high was 316.10. We closed at 332.17. So a $16 drop in Netflix, which at this point I don't see happening, but that doesn't mean it can't, would close that gap. Right now, I'm looking at Netflix going higher. I'm looking at it finding about $350 a share. That's about another $14 higher from here. And I think with next week's earnings reports out of Google and Amazon and Facebook and Apple and a lot of other stocks, I think Netflix is going to follow suit and begin going higher as it relates to these other stocks kind of setting the pace on their earnings runs higher. Because Netflix is, for all intents and purposes, a market leader, and it just busted out with its subscriptions of 150 million subscribers worldwide in Netflix. Just amazing numbers. I think Netflix will go higher. Whether or not it goes higher tomorrow remains to be seen, but I own the June calls, so I have plenty of time. And again, next week is my focus, and I think next week is the week when this market just gets on its horse and starts getting some traction and moves a lot higher. Again, everything remains to be seen. We'll just take it one step at a time. Now, Tesla has been really a bizarre stock. You know, it totally collapsed, and then, you know, hit a, you know, just wham. It's like it bounced like a Super Ball to the upside, found some resistance, has hit it a few different times, fell, and now is trying to go higher again. I honestly don't know what to make of this. Now, certainly we can draw some Fibonacci's on this and make a determination as to what is likely to happen, but Tesla has got this rather remarkable and cult-like following that seems to never give up on it. So Tesla did close over $300 a share today after closing down at 244. Sorry, that's not the close. Closing down at 252.48 just about 2 weeks ago. So a real nice recovery, almost a 20% recovery in the stock. So it's like, wow, you know, what's next? So, and really, because it's Tesla, anything could be next. I definitely want to be able to, I want to show you the chart of the VIX. Now, I mentioned that I was still looking for some lower prices in the VIX, but I also said that the VIX could actually move higher. We have this kind of, this little area right here that serves as kind of a concavity, which can draw price to it. Now, the VIX was very non-participative today. It did go higher, but not with much assertion. It was like, okay, the market's lower, I guess I need to go higher. Again, there was this obligatory dynamic. Just got a sell signal in the ES. So take a look at that. But with the VIX falling, the VIX not going as high as, in my opinion, it should have, with as much as the market dropped, that tells me that this move today was just, as I said earlier, kind of an obligatory, okay, interest rates, that means we need to go lower. So there was some lower price action, some selling came in, and then we went higher into the close. So, you know, it remains to be seen how this all plays out. So that little sell signal was basically just kind of a momentum move. And we're getting a little bit of downside action here in the extended session. And we've been open for about an hour now in the extended session. So we've got a little bit of this going on. So, you know, nothing definitive or concerning at this point. So as it relates to tomorrow, Friday, you know, the weekends are always a little bit tough to call just because very few traders want to go into the weekend holding their positions. Now, I will be. I'm positioned. I, I hesitate to say comfortably, but I am positioned in a manner that is conducive to me being able to sleep at night, and I'm in a very, very good place with my portfolio right now. So I'm doing fine. I may put on a hedge over the weekend. I don't know. I have to evaluate tomorrow's trading and make my decision toward the end of the day. And of course, see how the market trades. Are we going to get some continuation from today, some lower prices? Is the worst over? Are we going to begin focusing on earnings again and maybe move higher? And will there be any binary events that move the market? Gosh only knows. That is becoming more the rule than the exception, to have some unknown binary events find their way into the news cycle and create some algorithmic and computer-driven trading model reactions that push price higher and lower and, even sideways. I don't know. I mean, it's become a very, very twitchy marketplace. So that's where I'm at this point. So in my portfolio, I am holding a hedge in the S&P futures, and I do have some DIA calls. That's the Dow ETF. I have some Halliburton calls. I also have some IWM calls. I have some Netflix calls. I have some VXX puts, and I have some XLF calls. And so as you can see, I'm predominantly long, but I'm also hedged. And that's how you do this thing called trading. You make sure that you're positioned for the natural gravity of the market, which is up, but you also protect your portfolio by establishing a position that, for all intents and purposes, ensures those up positions are protected from a downside move. So therein lies, as I say, the way that it's done. So with that, I wish you all a good night and good trading. Please trade safe and trade what you see if you choose to trade at all. Take care, and I'll see you tomorrow. Good night.